so you should see the screen and you hear me. So let's begin. We have a pretty fat list of things to discuss for the coming week. Quick welcome for all. Hello from Nigeria. Hello from Canada. Thank you, Ahmed. Quick welcome to all those of you who watch us for the first time, recorded or live. In the trading report that you receive after the live room, please watch the video how to use the report correctly. You have also the referral to all the most important webinars to watch in order to understand how do we trade and what do we do. Of course, it's just my techniques. You can apply any of yours. The most important thing that we do is we choose the directions we would like to focus on. So instead of during the day or during the week wasting the time of analyzing are we buy, are we sell, we basically prepare the list where we are looking for what, how do we want to see that happening, and what levels we want to trade, and what do we want to see on the charts before we make our decisions. Okay, very, very important. So let's start. The first one today, euros. The euro dollar, quick update from our previous week discussion. So we are still here in the double cycle from the weekly chart. Bullish divergence is forming. We did not yet get anywhere the reversal signs. What are the reversal signs? We did not yet have any higher highs or after false break, right? We do have the false breaks. We don't have higher highs. And we never got yet the structure of higher highs, higher lows, potentially turning it upside. Therefore, as long as none of these variations happen, the pressure of the euro dollar remains bearish. Previous week, we accepted the short-term buy opportunity, as you might remember. The idea was to get this triple cycle or special cycle, doesn't matter how we name it, to get the retrace, to get another leg up. So that's pretty much happening. The biggest question, what will happen from here? So this becomes our invalidation, right? Because if we break above that, that means we have false breaks and higher highs, and we can start looking for buy retraces for the weekly cycle correction. But as long as it didn't happen, the pressure is bearish. Now the 4-hour chart does provide the two waves, does provide a divergence. There is a little problem with these two waves. First, assuming it cycled by itself, it has to reach the area of 61.8. It didn't. Second, if this is 4-hour chart double wave cycle, then 1 hour has to have cycle by itself on each of the 4-hour chart legs, right? So if this is our 4-hour chart and it has to have cycle by itself for each of the 4-hour chart legs, that means that the red leg here and here should be cycle. Now this was a cycle, we just spoke about that, right? Divergence was there, everything okay. On this one, we don't have any of the divergences. We don't have anything here that could technically be applied, right? So that's, we can't even draw it like this. So this is what we have, and there is no divergence yet. Not moving averages and not histogram. So there is a chance we're still going to play here to create this false breakout. So the euro dollar, as long as we don't have this top broken, we are looking after possible sells, but it definitely has to clean the setup for us. Okay, and that's what is the most important thing to see on the euro dollar at this stage. Because if it doesn't make it, look what is our next possible scenario. 1, 2, 3, then it becomes triple highs going up, triple low going up. That becomes as a possible reversal that we were talking about. So we have to be very, very careful with the euro dollar. I would not deal with that on the short term as for today. Definitely that might change on the coming day or two. This level is the bounce level from the trend line, so we might see here some bearish reactions, but the biggest question would be what's next. As for now, there is no clear setup, and therefore, as for today, the beginning of the week, it's best not to deal with that on the short term. Now, before we continue here, I just want quickly to go over the fundamental things we have this week, and this is very, very important fundamental week. It starts tomorrow with the Parliament Brexit vote, and we also have the average earnings in Britain, CPI on Wednesday, and the FOMC funds rate decision in the US. Economic projections and the statement to follow, of course. GDP in New Zealand, monetary policy in Switzerland, including the Libor rate, press conference from Switzerland, and then the European Economic Summit, the official bank rates in Britain. Very, very, very busy week. On Friday, flash services PMI and flash manufacturing PMI in Eurozone. So a lot of events that could affect the market this week. And if we don't have clear setups to trade, we better wait. Because if there is no clear setup before the event, that means that the traders don't have real obvious opinion, right? Because if there is a clear opinion, there is a setup before the events are published. If there is not, that means the traders have not obvious decision of what would be or might be the outcome. So for the euro dollar, our goal still remains looking for possible sells, but we do want to see a clearer setup forming. And the main levels we have for that is, of course, closer to the 61.8, right? This is our critical area, and the daily trend line, because this is a very critical highs here and here from the daily chart. Total invalidation for that would be the break of this. Good. We continue for the next, also longer term. The Europeans are for longer term this beginning of the week. The next one, euro versus the pound. Long story, we are bearish. Why? Because of the weekly triple cycle. That means we are looking for sell all the way down to 50%, or down to this range, still has a room to go. Now, that's for the longer view. On the short view, we do have double cycle from the daily chart. We do have pretty massive level of 61.8, and we definitely do have a divergence. So reactions upside could happen. What kind of corrections can we see when we have signs against? Very simple, 2 waves or range. So we might be exposed to that before the next portion for sell, or we might see the euro pound continue to move inside the mini range it creates here, right? It has kind of a consolidation here, and it might go and move inside that. The ranges could be big here. There are a lot of reasons, fundamental reasons, could have impact on this pair this week. And we did see what happened the previous week with every day changing opinion from the Brexit. Yes, voting for, voting against, voting for, voting against, right? And that's what will happen. That's what we saw. So it might be the same this week. Technically speaking, we are still in a corrective phase to the daily double cycle, and the corrections could be in 2 waves, which after we would want to sell, or if it's a ranging correction, then top of the range we would be looking for sales. That's the 2 main things we have to remember. Do we really have any reason to go longs here. Technically, we don't have higher highs, we don't have bullish structure, right? So any bounces that happen or might continue to happen are still considered to be short term and aggressive, as they are against the higher time frame cycles. I'm talking about the weekly triple. Okay, so yes, short term we might see pullbacks. We will want to go into sell them. That would be much, technically at this stage, safer than trying to guess what's next. We do need to pay attention to this engulfing possibly happening today, right? We still have like 5 hours, a bit less than 5 hours to go. Okay, that might be the good sign for those who love to trade short term against. For all the scalpers out of you, this sign might be definitely good as a possible short term corrective movement. But for all those who are trading for the longer term, then sell the rallies was and remains our plan. Next one, Euro versus the Aussie. Unchanged, to be honest. We are still inside a weekly triple cycle as well. Bearish divergence. We are after two waves or a range. Same idea. For us, sell the rallies would be the plan. On the daily chart, we are currently in a range here, which means corrective phase to the first leg. Right? As long as the top range holds, we are after sells. That's pretty much it. On the short view, there is nothing new or available, because on the short term, this is what we are facing. Nothing clear. False breakout doesn't provide really nothing. So the Euro Aussie is holding its direction for the longer term as bearish, as we are following since previous week. And the last one is the Euro versus the CAD. Same idea exactly. We are in a triple cycle, meaning we are trading two waves correction. On the weekly chart, we got one leg down here. It was broken as a triple cycle. 1, 2, 3. False break on the bottom, false break on the top. That makes it what? A range. So sell above 50% of the range is our plan. Every rally that takes us there, and we use that as a sell opportunity. Looking on a daily chart, we did not yet have any divergence. So what are the possibilities for the Euro CAD? Same like with the Euro Pound. Two waves and sell, or holding a range. Same idea. And sell. Right? This is for the Euro CAD. On the shorter view, we don't really have any new setup. You can see yourself how all the last candles from previous week, right? The whole previous week until this very beginning of the week. Look at these candles. Look what we have here. Personally, I think this is an untradeable situation. That means basically very simple. The market has nothing to offer in terms of money flow for this pair, and there is no new opportunity we can find on the short view. Therefore, the plan remains for the long term. As the daily fits in the weekly, and that could be, sorry, wrong button, that could be two waves, and then looking for the bearish divergence and sells. Or if we do hold the top of the range, this mini range we have on the daily, if we hold the top here, we are after sell setups there. Okay, so that's for the long term. Short term, again, you see yourself, there is nothing to do on the last week. That's for the Euros. So where I would put my focus personally, Euro Aussie, definitely Euro Pound. I love this one, and it's been great for a while. And then Accordingly, EuroCAD and the last one. As for today, the euro dollar. Euro yen and euro franc personally for me are not clear, so they are not included in my personal list. Next one is pound dollar, pound franc, and the rest of the pound pairs. So we are bullish for the long term. Brexit things will continue to create the noises. Ups, downs happen and will continue to happen as the news will continue to be released. So this is a double cycle we trade from the long term. We expect this for the very long term. Weekly chart fits in, providing us triple or special. It doesn't matter how we will name that. The idea would remain the same here. 3 higher highs, higher lows, identifying the beginning of possible bullish trend. 2 waves as a correction. Bullish divergence with a false breakout, and the fact we are creating higher highs. So our plan remains, look for buys for the long term. Daily chart currently does have some barrier, exactly like the euro pound we saw before, just opposite direction. It does offer possible second false break. Little pullbacks are welcome, and we would be looking to go and to buy them. Keep in mind that there is a good chance, as we had a false breakout on the bottom from the weekly, and this possibly turns to be a false breakout here, we might be exposed also to a movement in a range. It does not change the long-term plan, which is look for buys. However, does that offer us a possibility to trade short-term sells? Not yet. We don't have lower lows anywhere, right? It's still, all the swings are still going up from daily and from 4-hour chart. Nothing yet changing it. All the swings. And we don't yet have this structure, which possibly changes the direction, right? So there is no way and no reason to rush into pound dollar sells. However, we do need to pay attention to this daily structure of the false break and the candles. If this becomes a divergence, 4-hour chart would suggest a possible corrective cycle. Corrective cycle could be 2 waves. Corrective cycle could be a range. So we can continue to move inside that area for the whole week. But that's why for the short term, it's very aggressive. Could provide a sells, but doesn't have any technical reason for that besides the daily divergence, right? And the level. 4-hour does not have any real value to provide us here. It does have this verification of a cycle, I would say, of the daily cycle. Right? No lower lows, no 3 lower highs, lower lows, nothing in terms of reversal. Everything happens only on the short term. Now on the short term, it's irrelevant now, but I just want to show you what do I mean by lower highs, lower lows. Okay, 3 lower highs, lower lows, double wave, retrace. You see that? That's the structure which I always talk about as a possible reversals. Now this happened on the 1-hour chart. So the correction belongs to the 1-hour chart, right? If you trade that, you always have to remember if this is where you're looking for your trades after the retraces, right? Then the management would also have to be short term. If the entry belongs to short term, management, at least partial, will also have to belong there. Very important to remember. So 1-hour chart does offer these possibilities of the correction. The 4-hour still not. However, if the daily does end as a bearish divergence, we do go for acceptable 4-hour chart corrective cycle, 2 waves or a range. So for the pound dollar, short-term retraces are welcome. We will be definitely looking to go and to buy them once they complete. And for all those of you who are running with these buys, there is remember from like a month ago, There is no real reason here still to go into cash out fully. All the higher time frame cycles, weekly and monthly, are still bullish. That's pretty much it. Pound franc, same story exactly, like with the pound dollar. The only difference is the long-term cycle here. It's a bit bigger than the pound dollar, which we were talking here. It could be measured like this, could be measured different way. Bullish divergence is the last divergence that we have here. So our long-term plan is this. Weekly chart fits in perfectly by creating triple double. Same principle as I always discuss: false breakout, bullish divergence, convergence. On the short-term view, daily is a cycle, mirror, kind of a mirror to the euro pound. Okay, two false breaks in play, one horizontal, one alternative trend line, spot 1, spot 2, spot 3. This is exactly where we get the false breakout. This could turn to be an engulfing, exactly as described on the euro pound, just a mirror. And same principle, we are good with short-term drops. This is also kind of a triple cycle upside, level of 61. Definitely good for short-term corrections before the future buys. 4-hour chart does not yet provide any lower lows or any pattern, so the correction could be also range, right? Something like that only, and that would be acceptable. 1-hour chart did provide us the short-term view, exactly like with the pound dollar. So this is what we are facing here. Okay, apologize. And the two waves pull back again. 1-hour chart structure inside all this 4-hour chart range. That's what makes it so small. Since then, the breakout and the bearish continuation, very acceptable, very likely to offer short-term trading opportunities. But for the long term, we would be definitely after buying the retraces. Retraces to happen are acceptable on the 4-hour chart if the daily completes its divergence. We will know that at the end of the day. Next one, pound versus the kiwi. Pound kiwi pretty much comes from the same view. Triple, we expect this for the very long term. Shorter view, weekly. That means as long as we hold the lows, we are after buys. Daily chart, double cycle, still fighting, still respecting, still holding. Short-term correction, same exactly, you can see that, right? All the structures are the same, short-term retraces before the future buys. Now, should we go and get exposed to all of the pounds? Of course not. How do we choose the best ones? That depends on the strategy or strategies you use. And the outcome should be very, very simple. What provides you the best technical setup, which means no obstacles on your way from the higher time frame when you get your setup, and what provides you the best of the risk reward initially. Why it's so important? Because if you start your trade with maximum 1-to-1 risk reward and you would get signs against you might end up with a trade that pays much less than 1-to-1 risk reward. Doesn't make sense. So you want to start as high as possible, and then as the trade adjusts, as you start to get signs against you, you would have better probabilities and possibilities to make a partial cash out, but correctly. So for all the pounds, we are good with the retraces. They are welcome. later than that we are after buy the retraces for the long term. Now there is one that might be a bit different, and this is the pound cat. I want to explain here the view. We do not have cycles to refer to from the higher time frame. We do have a structure here of lower highs, lower lows. So buy retraces here could be very, very welcome. Now take a look what happens on the daily chart. We are right now at the top of this megaphone, channel, tunnel, call it as you would want. That means short-term retraces are welcome before the future buys again take place, right? Going lower, look at this wedge developing right now. Okay, this becomes a very, very serious consolidation. It does show its possible reversal signs. The divergences are there everywhere. Yes, we don't have lower lows at this stage, but it is a clear consolidation. Slowing down momentum, right? It's rounding here, losing itself. Okay, the angle changes. So once and if we do get out of the wedge, then sell the rallies would be acceptable corrective cycle for the trading. We do have to get below this wedge first of all, and then sell the rallies will be definitely acceptable thing here. So keep that on the watch list. It might turn to be a very interesting opportunity for the coming week. Dollar pairs. Before I continue, any questions, guys, about any of the mentioned so far? Aussie dollar. Also, Australian pairs we would reach. Just please, until now, any questions about any? Good. So it seems all okay. Next ones, dollar pairs, dollar yen. We discussed about this pair previous week, about these signs. What do we do when we are in a sell, which we were here, and the pair does not go? When we start to get false break and false break, what do we do? So previous week, I think it was Wednesday, in my last session with you before Jordan took his Thursday session, we talked about this scenarios exactly. What do we do if it doesn't develop as we would wish? So one of these things is always listen to the market. We could be the best technical analysts on the planet. It doesn't matter how good we know to draw on the chart and how good we explain our expectations. The market doesn't really care. Will that move accordingly or not? It's only up to the market to decide. We as traders always have to be able to adjust if we do not get the momentum we want. Remember, it's all the cycle idea, all these lower lows and breakouts, it's all about momentums. If it doesn't gain the momentum, the market is trying to tell you very simply, there is no money flow. There is no money involved. And if there is no money involved, it doesn't matter how good you draw, the market would not move. And if the market doesn't move, you can't make money. So the ability to adjust our plan to what the market provides to us is critical. And I want you always to remember that. If you are in a trade, and after some time, depends on the time frame you trade with, the market shows you signs against, respect that. The smartest thing to do is either kill your position or drop your exposure or move stop loss to break even or take partial cash outs, but take an action. Do not keep your full risk when you see signs against you. If it goes in the direction still, fine, you will still make your money, you will still make a good risk reward. But if it doesn't, you lose much less. And in a game of statistics, which trading is, in a business that is all about the numbers, profitability is the most important thing. Profits you don't make by trade more. Profits you make by lose less. And if you know from the trades that do not develop as you would wish to finish instead of the 1% risk or 2% risk or any other number you use, if you know instead of that to finish with half loss of that number, you immediately improve your performance dramatically. So dollar yen, we discussed about that previous week. And it was great call to be careful as it provided the second push up. So the biggest question is what's next? So dollar yen still sits on a double cycle, which means as long as it holds this top, we expect a correction. Correction could be two waves, or correction could be any kind of a range. How it might go, we have no idea. Looking on the 4-hour chart, do we have any lower lows? Do we have any structure of lower highs, lower lows? The answer would be no. So the only thing still possible to be traded here was and remains the short term. And the short term in that case is the 1-hour chart. So previous week, 1-hour chart, this was the trend breakout we got. After that, we discussed about cutting our exposure here, and we got a new rally. Now we have the two waves here. Now we have the lower lows. Not convergence principle, lower lows. We got the pullback, and we have the move down, which now creates a bullish divergence. So let me ask you the question, guys. Is that attractive enough to trade, yes or no? For me, the answer is no. I don't know why, but since the beginning of the week, since yesterday evening, dollar yen is one of the most asked pairs I receive in questions. Vlad, what do you think about dollar yen? Dollar yen. Why? It has nothing clear on the 4-hour chart. 1-hour chart is against us. So based on what should we rely now for this pair? There is nothing we have. Okay, and that's basically exactly these situations where I say to myself, why to waste time on something that doesn't have a structure to trade? Try to guess where it will move? Why? We do want to trade facts, not expectations. And dollar yen, fact, as for now, doesn't have anything. So for me, it's a completely neutral thing. And I wanted to cover that not as opportunity to trade, but mainly as opportunity not to trade. As for the beginning of the week, it has nothing to offer. Therefore, I skip it. Now, this is a very good question and also been asked today. So if it doesn't have opportunity for sell, should we go and buy? Wonderful question. My personal view, I never go against the cycle, and daily is still a cycle that still holds the level and still possibly to provide a correction, and I never go against higher time frame divergence, and this is currently what we face. So if I don't have a reason for sell, it doesn't mean I will go and make a buy. So no. Okay, that's pretty much what it means. Dollar franc is more interesting, both short term and longer term, and here is why. So first of all, for the long term, my personal view remains same after bullish here. Weekly chart is much more tricky. It doesn't have anything obvious. That it does have this ranging pattern currently, and it's moving there. It will break that one day. We do have the cash rate decision in the US and in Switzerland all happened this week. We do have the press conference as well, so pay attention to that. My long-term plan is buy dips. On the short view, currently we are in this triple descending cycle. You can call that a little wedge inside a big range. So yes, short-term retraces are more than welcome. Retraces could be in two variations, as you already know. 1, 2, or range. So we do have a false break. This is the next possible low to be reached. We might go and play here for a while. So short-term dollar franc might be go and offer short-term sales opportunities, which later we will definitely want to go and to buy. So for my point of view, this becomes a trading opportunity. Sell the rallies for the short term, and once these rallies provide bullish evidences like bullish divergence or bullish false breaks and higher highs again, this becomes a buy again. So dollar franc short-term sells as long as this top holds, sell rallies, and long-term buys, but it's very early for, and most likely would not be relevant. Most likely would not be relevant for this week. Aussie dollar is our next one for all those who ask the Australian pairs. Long-term buys remain our main plan. Special cycle, bullish false break, bullish kicker a couple of months ago. Weekly chart has its own double cycle. Actually, it's triple cycle to be more specific and precise. Bullish divergence, we are after buys. Daily chart gave us two waves. Bullish divergence, and it's a buy. So we do need to break this trend line in order to get the momentum. And this is for the longer view. The short view, we look what we have. It's a double cycle. The daily trend line yet to be broken. It wasn't. We do not have yet the 4-hour chart higher highs, higher low structure. So we do not yet have the buys. We did have that on the short view. And if we say that's the 4-hour chart, double cycle, each of these beautiful legs would be a cycle by itself on the 1 hour. And this we had. That was the 1 hour. That was the corrective cycle, a range. And that's the second cycle. So 1 hour, the short term, provided a beautiful buy opportunities previous week and pretty much paid. For the long term, we still are on a waiting zone. We don't have yet a trend line, and we did not yet have clear 4-hour chart structure. Yes, it did on the 1 hour chart much clearer, and that's why it provided a double cycle on the 4 hour. Right? But game over. The 1 hour chart paid. The 4 hour chart is two ways with possible divergence against. Should we do anything on the short term as for the beginning of this week? No. And with the FOMC to come, it makes sense that the market is in a waiting mode because they want to see what happens. There is a good chance that everything until then would be just a temporary noise. A bit up, a bit down, a bit down, a bit up. So once we break the trend line on the daily chart, it's a longer term bullish call, or the 4-hour chart to create higher highs, higher lows for us. So short term, as for Monday, we don't have anything to do. Previous week buys finished. It finished because it has the divergence against right now against us. Okay, and as I always say, we trade facts. The fact is, the market says be careful. So we will. And Aussie franc is our second Aussie pairs on the list. Later. So what do we have here? Again, long-term buys based on the very massive long-term cycle. Weekly last divergence is bullish, and daily basically offered us the two waves, holding this low for us. And the 4-hour chart did the false break and the higher highs. And that's where we are bullish. Okay, so the plan here also doesn't change. We are after buys from here or any other drop. The plan will still remain only looking for bullish setups. And a new one coming on our list, very interesting one, the one that we've been waiting for a while, OZKW. So what do we have here? We are in the monthly special cycle, which means we are after corrections. Corrections could be a range or two waves. At this stage, it's holding the range, and we're now at the bottom of it. So we would expect a reversal. Weekly chart is a double cycle with a divergence. Ugly, yes, but still double cycle. So we are after retraces. Daily has to make the higher high structure. It doesn't. So we can't trade the long term yet. However, the daily does fit in as a cycle for us, right? It does have this mini structure in this. Can't really draw that with this scenario. And the 4-hour chart right now, after making this two-way correction, right, made the second push. This is from daily, first cycle, correction, and this is the second cycle from the daily. So the 4-hour chart right now is trying to form this. If it managed to do that, that's triple high, triple low. And then we are good to go with buys. They would still be considered as short terms. Why? Because if we do want to trade the long-term cycle, the daily would have to become bullish, not just the 4-hour. So meanwhile, as we don't have anything for the long term, we still would be able to trade the short term. And this is what we would want to see. Right? And then we can go and trade by retraces. So OZKW is coming as a very possible trade. We must see the break of this high first, and then retraces and buys. Okay? Cat franc. So here we are. We are bullish again for the long term. I'm not going to repeat this structure. Triple cycle up. So we are very bullish there. As the weekly was bearish hidden divergence, we required to see daily as double cycle, and it was. It provided us a bullish hidden divergence beautifully. So the biggest question is what comes from here. This is still possible scenario, of course. Two waves, bullish divergence, and buys. And if this top holds, if this bottom holds, basically, I just want quickly to repeat, that's what we traded previous week, right? Trend line was broken, we got our rallies, we got divergence against. That's the sign where we have to make partial management, if it's partial cash out or move stop loss to break even. Now we are waiting for the new opportunities. If this low holds, then we must see that returning up again, break of trend lines or structure of higher highs, higher lows. As for now, it's not the case. If that doesn't happen, that means that the daily might go for the deeper correction, like this. And that means that this will have to become a new cycle, right? So that's what we would be looking for to happen. As for now, short-term drops lower are acceptable. I personally wouldn't trade them. I would definitely wait for them to finish the cycle, as just show, create a bullish divergence and push it up again. So for me, cat front as long-term buys, yes, acceptable short-term drops lower. No, I would not want to go into trade it personally. Doesn't mean it's wrong, just means it doesn't attract me. And this is my list for the forex. What are the best interesting pairs on my personal list? First of all, the Aussie Kiwi for the short term, Aussie dollar for the long term if it managed to break, and the European pairs I already mentioned on the European pairs at the beginning, which are my most interesting. Pounds, all are good for possible short-term drops downs. For long-term, buy these drop downs. And that's pretty much all for Monday. Of course, that might change by tomorrow. Now, Kiwi CAD, another one that we are carrying from the previous week. As long as this trend line holds, our expectations are bullish. Say no more because we don't have anything more to say here. That's pretty much it. Bullish on the short term. For the long term, I do want to see this weekly finish, cleaning and forming this divergence for a sell. So once the daily becomes bearish again with its divergence, next divergence we switch for sells. In other words, by ideal, that's what I want to see. Slow down, divergence, all the time frames to fit in and attack the sells. Commodities, gold and silver. Our plan remains the same, short-term bearish, long-term bullish. That's where it all starts from, 2 false breaks, lower lows. So the correction might be 1, 2, or a range. Now, we don't have a false break here. It's a bit trickier, so any kind of consolidation. So for short-term, sell the rallies could still work pretty nice. Once we get 2 waves down with bullish divergence, we are after buys. Short-term, sell the rallies. Long-term, buy these dips to be created. Same exactly happens on the silver. We are good with 2 waves. We are good with this range. We still, though, need another low to be retested. If it's in a range or if it's with 2 waves. Because if it's a range, we do need have 5 spots inside it, at least. We don't at this stage. And the last one is oil approaching to the critical area of 60. Quick reminder, we want to see a fight there and lower lows. So we do have the divergence building up everywhere, daily and the 4-hour. So what we do want to see here is the reversal. Once we get the false breaks and lower lows, we are after sells. So we don't have the setup yet. Definitely keeping an eye on this area. 60, 60 plus, that's where we would want to see our sell setup forming and coming. Oops, sorry. Okay, indices also on our list. German DAX, we're still double cycle, still critical levels, still waiting for the lower low. So this is yet, actually, right here. This is our low we want to break before the sells. Kiwi yen, I don't have a setup, not yet. Sorry, I do wait for that. Let me remove this. I do wait for 61.8. At this stage, I have nothing. If we reach the highs, I know what I will want to do from there, definitely, with this level and the divergence. But as for now, I don't have anything. So DAX neutral on the short term, bearish for the long term. We still require to see the lower lows. Nothing to do at this stage. Nasdaq, after failing the first attempt of the convergence, now around the second clearance zone, divergence is still forming. I say forming because we don't have the MACD ticking down. On the 4-hour chart, we do require to see the reversals and then sell the retrace. So we do want to see false breaks and no, again I pressed the wrong button. So we do want to see false breaks and lower lows, or we do want to see 3 lower highs, lower lows, and sell the rallies. As per stocks, as for now, there is only one going on for the very long term. We are talking about the Deutsche Bank, and we are coming from the very long-term cycle. Nothing besides that at this stage. So just again a reminder, guys, very, very important, very fundamental week. Do not rush to make any fast decisions. They might turn to be wrong. They might reflect with random zigzags before the news start to come and the traders regain their opinion of what's coming next. So I'll see you in the Telegram groups a bit later. Thank you very much for being here. I wish you a wonderful trading week, and we meet again on Wednesday. Thank you for being here. Bye for now.